Market Day Report. I'm John Jenkinson. Well, the grains, in fact, all of the commodities really under pressure today. For analysis on all of this, let's go to Allendale Incorporated and talk to Steve Georgy. Steve, welcome. Always good to talk to you, sir.
Thank you very much.
Pressure is just relentless on this commodities market.
You know, it sure is. And a lot of this is being, and as we're hearing, a lot of grain, old crop corn having to move by the end of this month. And so a lot of contracts are due and not able to roll it anymore. And so what do you do with all of it? And that's what's coming to the market right now, giving a lot of this pressure. But you're right, it is absolutely relentless.
Steve, how much grain do you think is still out in the country that still has to come to town before we have this next harvest?
Well, probably a lot. When you look at, well, let me step back here. I think a lot of this is switching hands right now. Commercials are starting to get this control. Once we see that switch from farmer control to commercial control, then the market starts to react a little differently. But it was exactly last year, too. We had a huge crop. But it was August 31st last year. We put a low in this market at $3.14 3/4. The market proceeded to rally for the next 7 days, and we were back above 340 that year or last year very quickly. We are probably undervalued, but right now this cash has got to come to town, and I believe that it is right now. How much is left? If you're not going to sell it right now, you're probably going to hang on to it is really what it becomes.
So is basis going to have to do some of the heavy lifting on this to attract some of that to come to town?
It's going to have to, yes. We're going to need to start to see that firm back up. We're going to see it right now. It's just really wide. Nobody needs it, and there's a lot out there. We know it. But what do we have coming up? We're going to shift the focus from old crop to start looking at new crop as we move forward. And so will we get some kind of colder weather? We know that's coming, but what kind of yields are really out there? And that is what's going to be next.
Yeah, well, combines don't lie. We'll know a whole lot more when those combines are able to get into the field. You bring up a good point, Steve, and that's the fact that we've got some positive bullish news hit and misses. We've got this potential of cold weather, maybe a little bit early. We've got the report that we had this morning on a few sales. We've got the crop condition ratings that really didn't do us a whole lot of good one way or the other. We've had some bits and pieces, but it sure shows just how negative the tone is in this market.
Yeah, I believe we're trying to put in this, if you want to call it more of a harvest low, but I feel like we're trying to put in this seasonal load now, much like we did last year, where we can finally get this out of the way and let's start looking toward what's next and now start to see this market recover as we move through the end of this month, but get into September.
So what are you telling producers when they visit with you about this?
Well, a lot of it is if you've got these contracts that you have to deliver on, you need to look for some kind of reownership. Look to reown it on paper versus you owning it in the bin. Because chances are that these lows are coming in right now where we do have some hope down the line. But you need to stay focused on that. If you're being forced to sell it, then make the sales, but find a way to find some kind of reownership on this crop all the way through till December.
Steve, we want you to hold on the line with us here for just a moment. Let's look at those futures numbers before we go to the break. And we've been about in that 2 to 3 cent lower range all morning long with the corn. In fact, corn down 2 1/4 now, 3.33 3/4 on the nearby. New crop down 2. Soybeans also in the lower category. We're down about 1 3/4 cents, 9.39 1/2 on the new crop. Wheat, same story here, only maybe not as bad. The December Chicago wheat now down 1/4 at 4.27 3/4. Kansas City wheat also down about 1 1/2, 4.24, and then over to the Minneapolis wheat. We're standing about 7 1/2 cents lower at 6.56 3/4. Cotton, real quick, before we get out of here, 45 points higher at 70.28. We're hovering about that 70 mark, which is certainly encouraging. Stay tuned. We've got more of the Market Day Report straight ahead. Steve Georgy, our guest with Allendale Incorporated. All right, Steve, let's talk about the livestock trade and what's going on over here. Pressure on this market as well. And we started out with a little bit of optimism in the cattle market. We weren't able to hold on to that. So what's given here?
Well, I think a lot of this, as far as livestock in general, cattle, we found a nice recovery the last few days. Still, the cash market's going to be king. So we haven't heard any bids on the country yet, haven't seen any trades yet. So will we see some kind of recovery from the cash market, or is this going to continue to plunge? And this is where we still need to answer that question. But looking at some of the early market, I guess, influences could have been more or less the stock market that was down over 100 and some odd points early. Now it's starting to come back. Some of that outside influence may be weighing on cattle early today. But overall, as we go through this week, it will be the cash market that's going to end up leading this thing.
Well, from what I'm hearing, feedlots are still pretty current. Everything's kind of on an even keel right now, so it stands to reason. But is this a seasonal time when we can see this market try to level out and take its last summertime breath?
You know, and typically it does, and I think we can. We've seen these markets depressed, not only for cattle, but we also look at hogs. Hogs seasonally will put this low in early part of September, but then you get this buying for hogs for more of a featured pork month here coming into October. So we end up putting this low in. We did this last year too, where we can see a pretty strong recovery, especially out of that October contract. So we'll see if that does happen. But we've seen not only cattle down sharply over the last several weeks, but hogs taking an absolute bloodbath as well, where I feel there's some optimism here coming here over the next few weeks. We just need to find that low and really look for some kind of recovery.
Well, it's really going to be hard to recover if we don't see that belly market start to firm a little bit also.
Yeah, no, that's been hit real hard. You know, every time you come in and you look out cutouts, or you look at the cutouts, you know, that has been down sharply. And so, yes, we need to find that, stop the bleeding per se, or just stop going down before we get this recovery. But that's what's hitting the market here today.
Steve Georgy, our guest with Allendale Incorporated. Steve, always good to talk to you. Thanks a lot.
Thank you.
All right, before we wrap up, let's take a look at those numbers before we finish this segment. Live cattle, feeder cattle all lower. Let's start with the live cattle. October live cattle down $1.20 at 107.18. December down $1.06 at 110.32. Feeders also on the lower side, down $1.28 on the nearby September, $1.55 lower at 144.85. And then hogs also in the tank today, down to 122 on the October. December hogs down $1.38 at 56.20. So, Janet, we're just kind of continuing to watch this thing grind lower, but we'll stay on top of it.
All right. Thank you very much, John. And John, welcome to the team.
Thank you very much.